Hello and welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. Well, it was a super eventful week. The last one that we saw, the Sensex made a new high on Friday. The Nifty came within 20 points of its own record, and this in a week where both the benchmark indices had actually witnessed their biggest one-day drop in 4 years that resulted in a 30 lakh crore rupee worth of investors' wealth being eroded. But that money was fully recovered in the next 3 days after Tuesday's drop. That was the day of the Lok Sabha poll results. Now, for the week, both the Sensex and the Nifty are up with gains of nearly 4% odd. Of course, about from that, we also saw from the RBI, the Monetary Policy Committee, being a status quo policy on the repo rate front, but the RBI raised the GDP forecast. So that gave some kind of a fillip to the market momentum. Prime Minister Narendra Modi over the weekend has taken oath as the Prime Minister for the third consecutive time. Remember, India has also won the match with Pakistan with a tiny margin, so a whole lot to digest. And the foreign investors have also turned out to be net buyers in the cash market on Friday. Good morning, Shail.
Good morning, ladies and gentlemen. We begin a new phase on Indian equities as far as the long-term bull market is concerned. Remember, Modi 3.0 takes charge today. And Sakshi, let me just add two more important points to the list that you've mentioned last week. The monsoon has hit Maharashtra. There are rains happening across Mumbai. So all is good. Yes. Point number one. The second point is that the entire cabinet will be known in less than 1.5 hours, if not earlier, because ministers have to reach their respective ministries and take charge. So over the next 1 hour or so, you will see India Today covering various ministries and whatever other ministers, there were about 70 that took oath yesterday. Out of 70, 30 were cabinet ministers and 50 were ministers of state. So Modi 3.0 fully in charge, and that, ladies and gentlemen, will have a major impact on three main market constituents. The Minister for Heavy Industries will be in charge of the PSU pack. The Minister for Railways will of course take care of possibly the best known segment that has worked very well over the last 3 years. And finally, the Defence Minister, that will take care of the entire 5, 7, 10 PSUs that we track in the defense space, and of course 15 other PSU companies within that particular sector. So these three appointments, and of course the finance minister will be the key things to watch for. Now, ladies and gentlemen, let's focus on what the Nifty is likely to do, and we'll start with a very familiar Nifty daily chart for you. Yes, last week was intensely volatile. Sakshi, there was a 2,000 point trading range. It's a rare event to happen for a market, Sakshi, to hit a record high, which is 23,337 on the Nifty, and the next day hit the 200 DMA, which was 21,231. So a whole host of emotions is what the Nifty went through, and at the end of the week, you see the resilience of the Indian economy. The Nifty added 760 points or 3.4% to end almost a whisker short of an all-time high on Friday. It's a no-brainer. We'll see it one very quickly. Primarily driven by very strong short covering in the software sector, which is a huge part of the Nifty. Now let's look at what the Nifty is likely to do. We've seen this 760 point kick up in the Nifty, Sakshi. So my assumption is that today we'll have a slightly sideways to consolidative gain, and that is exactly what the GIFT Nifty is also pointing to. You have a 50-60 point drop down. That's not a problem at all. Intense build up of long positions is happening. So it's only a matter of time that we'll see a record high on the Nifty as also on the Bank Nifty. Well, rains are there on Maharashtra, which is the most important economically sensitive state as far as the markets are concerned. So fund managers should be happy. Heavy rains are reported in Mumbai, and that is something which is good not only for stock markets but extremely good for the broader economy as also for our farmer friends. Let's dig a little deeper. We'll be focusing on what the cabinet formation is. As I have said, 30 cabinet ministers and 5 ministers of state took oath yesterday. Needless to say, apart from the Nifty, the market will also focus on the Bank Nifty. Sakshi, the Bank Nifty, whose weekly expiry is on Wednesday, is still short of about 1300 points from its all-time high, and we've seen a very strong bout of short covering happening in ITM Nifty calls. So ITM Bank Nifty calls. So that's a very big plus as far as the Bank Nifty is concerned. I will keep an eye out on State Bank of India. That is one stock that should reclaim its all-time high fairly soon. Let's look at Nifty options data, Sakshi. Very strong support at 23,200, 23,100 and 23,000. Let me just give you how the ITM calls are stacked, and that will give you an idea as to the strength that Nifty bulls are deriving from the option chain. So for the weekly expiry of 13th June, Sakshi, we have a net addition of almost 23 lakh puts on 23,200, a net addition of 14.54 lakh puts on 23,100, and a whopping 46 lakh puts are added at 23,000. So these are very strong support levels for Nifty bulls. And Sakshi, just write it down somewhere. 23,500 is in the sight. You'll see that happening very smartly and very quickly. 23,400 is also within reach, but let's hope for 23,500 and beyond this week as far as Nifty is concerned, Sakshi, and a record high on Bank Nifty, no doubt. Sakshi.
Okay. All right. So the markets will be definitely hoping for some stability to return after last week's extreme movement that we've seen across the D straight. Overnight, what we've seen on Friday, in fact, that's on the Friday evening trade on the US markets, they ended near the day's low of the day as stronger than expected jobs data fanned fears of a delayed rate cut. So we did see all the three indices on the Wall Street, Dow Jones, Nasdaq and S&P 500 ending lower. Dow Jones about 0.2% lower, Nasdaq and the S&P also slipped about 0.2% each in trade as well. The focus will now be shifting to the upcoming inflation numbers and US Fed policy meeting on Wednesday as well. Now the US 10-year yield has increased a wee bit to about 4.2%. Among the commodities, we've seen gold futures tumble to about $2,300 a mark, and then we've seen the Brent crude oil futures consolidate around $80 a barrel. So there's a volatility aspect there that's playing on the crude oil prices. Asian markets have staged a mixed trend in the early morning trading session today. So Nikkei was up about 0.6% in trade, but when we talk about Kospi and Hang Seng, they were down anywhere to the tune of 0.9% and 0.6% respectively. Shanghai was just managing to eke out about 0.08% kind of gains coming in. Gift Nifty at Shail is indicating a muted start. A loss of about 50 odd points is what could we be looking at. Fund flows, like I said, after having net sold stocks worth about 42,200 crores in the month of May. Even in June, FIIs have been net sellers. They've sold shares worth about 13,718 crores. On Friday, however, they were net buyers and they bought stocks worth about 4,391 crores. DIIs, however, they went into a profit booking mode. They sold about 1,290 odd crore rupees worth of stocks on Friday. Now let's look at key stocks that you need to keep an eye out on. I'm looking at Emphasis to begin with. Now, BCP Topoco 11 PTE, that firm is likely to sell about 10.6% in Emphasis via block deals. There is a report that the base price could be fixed at 2350 rupees per share, and the base size of the block could be 10.6% with an option size to upsize it to about 15.1% as well. And at the upper end, this could be valued at around 6,600 odd crore rupees. So we'll keep an eye out on Emphasis. Ward Wizard Innovations, that's another one that I'm looking at. Now, why this company is in focus? Because it's got an order worth about $1.3 billion from Beulah International for electric vehicles. So that could be in focus. Now, apart from this, Borosil Renewables, the board has approved raising of about 450 odd crore rupees via rights issue of shares, keeping an eye out on that. Arts and Engineering, the company has received a 126 odd crore rupees order for engineering and for construction at Guwahati International Airport. Gland Pharma is going to be in focus. The company has appointed Srinivas Sadhu as the executive chairman and the CEO of the company. RVNL, again there's order flow. The company's JV with KRDCL has received a project worth 156 crores from Southern Railway for provision of automatic signalling at Thiruvananthapuram. So we need to keep an eye out on that one too. Railtel from the railway space again has won orders worth about 81.6 crores from the National Informatics Center Services. Suzlon is going to be in focus. There is a management resignation. Mark Decider has resigned as the independent director from June 8th onwards. So that could be under pressure. UCO Bank is in focus. The bank will be hiking its MCLR on 3 months and 1 year tenures by 5 basis points effective from today. That's June 10. From the pharma space, I'm also keeping an eye out on Dr. Reddy's Laboratories. Here, the US FDA has completed the GMP inspection at about the API manufacturing facility. This is in Andhra Pradesh. But the company has been issued Form 483 with 4 observations. So there could be some pressure on that. Jubilant Pharmova, again US FDA has completed the audit of contract manufacturing facility in Washington. It's observed about 3 observations on that front. So these are the key stocks that I'm keeping an eye out on. Shail.
Ladies and gentlemen, let's welcome Mr. Geoff Dennis. He's a commentator on emerging markets, and it's a pleasure welcoming you, Geoff. Good morning to you, and a very warm welcome on Business Today. Shail and Sakshi joining you from Delhi. Is our voice clear? Can you hear us clearly, sir?
Can.
Okay, let's begin. As a matter of record, Geoff, we've always seen India, the economy as well as the stock markets being a relative island of safety in the chaos that we see across the world. Post the oath taking of Prime Minister Modi as the 3rd time Prime Minister, how are commentators such as you, fund managers, equity strategists and capital allocators now looking at India?
Well, obviously it was a big surprise in the end that the BJP seat count was much lower than anticipated. But I think it's been a relatively sober and sensible response, frankly, to this big surprise and the need, of course, for the BJP to combine with other like-minded parties in order to try and push the structural reforms forward. I just want to make one comparison here. There were 3 countries with elections last weekend, of course, South Africa, Mexico, as well as India. All 3 sets of results were disappointing for markets. India was the only market that ended up last week in dollar-adjusted terms, and indeed not just in dollar-adjusted terms, in local terms as well. Mexico was down 10%. So, you know, I think investors are really going to view this as potentially an extra challenge for BJP and Mr. Modi. But at the end of the day, I think it's very likely the foreigners will continue to want to invest in India, because I suspect there'll still be some decent progress on the reform front as we go forward into this 3rd term of office for Mr. Modi, against a background where the fundamentals of the Indian economy remain very strong, with very, very strong growth, of course, the strongest amongst the emerging markets. So disappointing at the margin, but I still think a market that is going to attract foreign investor interest as we go forward.
Right. Mr. Dennis, very good morning to you.
Geoff, what are you telling your investors when it comes to the sectors that may make sense within India? We've had this very, very strong run-up over the last 2 years or so in companies that are related to the government, where the government has a majority stake. So when investors approach you to allocate capital within India, what are your thoughts on these sectors?
Is this for me?
Yes, sir, this is for you.
Okay, sorry. Yeah, I think there'll possibly be a switch there, because clearly achieving sort of structural reform from here will be a little harder, and therefore the sort of sectors that you mentioned there with the government influences may be less in demand. But I would say still that you've got here an economy that's growing very strongly. Eventually, I think it's going to be reasonable bet that the RBI will be able to bring interest rates down as inflation softens a little bit more, both in India and, of course, the oil price is helping right now and also around the world. And I think that's going to provide also a good lift to some of the private sector names. So I would tend to be looking at sectors like I don't really do sectors much anymore, but I'd be tending to look at technology in India, pharma. I think the banks do well in this environment. In other words, I'd rather look at the style of the sectors rather than to what extent there's a government influence in those sectors being high or low. And that's, I think ultimately as well, consumer stocks will do well selectively, I think, because some, of course, are very expensive. So I'd be focused on domestic demand stocks generally, and ones where basically you rely on private sector growth activity.
Okay. Mr. Dennis, very good morning to you. I also wanted to understand, basis the political development that we have seen over the last week, have you changed your expectation on how the Indian markets will perform vis-a-vis the other emerging markets for this current fiscal year?
No, I haven't really. I favor the Indian markets. I think it should be an overweight in EM portfolios. To a certain extent, that depends on what people's views are on China. I think China's still got tremendous challenges. My current view on China is a neutral within EM. I think at the end of the day, given that I believe there still will be structural reforms, even though they may be more challenging now, and given that you've got very, very good fundamentals elsewhere, notably, of course, the strong underlying growth of the economy, it still makes sense to me to be a market where you're overweight. I mean, the currency weakens, yeah, sure, and it's gone, into this sort of 83, 84 range, but it really hasn't moved that much net since the election. And at the end of the day, we've had to deal with a very strong dollar. And I believe the Fed will start to cut interest rates before the end of the year, possibly now in September. I see the dollar going lower, therefore, before the end of the year. And that will help, I think, foreign investor attitudes towards India. So I still think it's an overweight, perhaps less compelling than it would have been if Modi had achieved a very, very big majority. But assuming that we can get some reforms underway here, I think or continuing reforms, particularly land reform, I guess, is the biggest challenge. I think India will still be an outperforming market, and I would still prefer it above all, I guess, to a market like China at this point.
Okay, I'm glad that you pointed out about China, because I wanted to understand a bit more on that front. Right before the elections began here in India, there was this narrative being built up that FIIs are now looking at the recovery in China and maybe pulling out money from India to put in China. Have you seen any of that really take place? And now what happens going forward from here? How do you see the attitude of FIIs towards India versus towards China?
Definitely, we've seen that in terms of opinions. I'm not monitoring close to the FII data myself, but you can clearly see that from the opinions of market strategists, etc. And you can see it from the performance of the Chinese market, which has been much better this year. Now, what China's got compared to India, of course, is very, very low valuations. And very low valuations both relative to India and relative to its own history, which is not the case with India. But at the end of the day, I think the structural imbalances in the Chinese economy are still so severe, notably, of course, the very, very weak property market and the inability of the economy to achieve this switch from investment and government spending driven economy to consumer spending. They seem focused on trying to boost exports only, and that will hit some sort of barriers, with, of course, the rest of the world, hence the tariffs you're getting in the US, and you may get more tariffs in Europe as well. What you really need to see to get the Chinese economy moving smartly again is a switch towards consumer spending, and then they don't have in place the policies to achieve that. So I think the economy in China is still going to disappoint. You've got structural imbalances, particularly with respect to the huge problems in the property sector. And India, I think, looks much better bet against that background. And therefore, I think the amount of FII money that will switch from India to China at the end of the day will probably be relatively limited, unless and until we get some much, much better fundamental data on the Chinese economy.
Mr. Dennis, versus the developed markets, how do you see the emerging markets perform in fiscal year? And within that, where would you put India?
I've argued all year that emerging markets will probably trade in line with developed, maybe slightly better. I'm not super bullish about EM. I think because of the slowness with which we've been able to talk about Fed rate cuts, getting the dollar lower, it's going to be a challenging year. My call for this year is 10% upside for EM. We're up about 4.5% as of last Friday, so that's pretty much in line with the forecast we've got. Developed markets is doing better, and that's because the US is doing better. Now, my bet is that as we go forward, the US market will flatten off, will soften up a little bit because it is expensive, and I think as the dollar goes down, I think you'll see some more interest as you go through the rest of the year in some of the leading overseas emerging markets. Not enough to give you a big 20-30% move or anything like that, but just the beginnings of a shift towards EM. So I would say over the whole year, EM may very well outperform DM, but we've got a bit of catch up to do before we get there. And within emerging markets, I would certainly favor India as one of my main overweights.
Perfect. Well, thank you so much, Mr. Dennis, for being with us on this very special edition and speaking to us about the outlook on India as well as the emerging markets. Truly appreciate your presence with us on Business Today. Hoping to see you back very soon on our channel. Shail, to yours.
Ladies and gentlemen, we are just a minute away as far as pre-open markets are concerned. Remember, we had a blowout last week. Despite all the volatility, the Nifty ended about 720 points higher, 3.4% uptick, and closed within a whisker short of its all-time high. Let's look at how data is structured at this point of time. And apart from the Nifty, what we are also looking at is a very, very strong run-up happening in IT stocks, in particular stocks such as Tech Mahindra, Infosys and HCL Tech, which are all part of the Nifty. Heavy short covering was seen all of last week in these counters, especially after the election results were out. And we are hoping that those gains will continue in the days ahead. Apart from that, there is a strong move expected in all Andhra Pradesh based counters because of the kind of coalition governments have come in. Okay, the Nifty as flat can be. This is what was indicated by the GIFT Nifty as well. We are going to see a consolidation of the rally that was there all of last week, as also the volatility that was seen across the board. Let's now look at how the other structures are in place. For the moment, you have a green tick on Asian Paints, 0.6% higher as far as prices are concerned. Let me just look at some other parts of the index. Sakshi, why don't you just take over? There's some issue as far as my software is concerned. Let me just get rid of this pain. Why don't you point some winners there?
Absolutely. So let's look at first the stocks that we have been highlighting in our stocks to watch list to see how those are pointing out. Remember, the railway pack has been winning a lot of orders. So RVNL, let's look at RailTel if they are reacting to those things. Remember, I also, yes, 2.4% higher for RVNL, and then let's look at RailTel as well. Both of them won orders today. So let's look at that one as well. A very strong move that can be seen in the pre-opening trade for RailTel, about 7.5% higher in trade. Let's also look at how some of the other stocks are doing. Let's look at MGL. There's a solid report that's coming from Bank of America Securities on MGL with a target price of 16.90. Yes, there is a 3.4% uptick. Remember, this is after the analyst con call has happened, and FY25 volume guidance of 6 to 7% year-on-year growth has been retained, and there could be some more uptick on this too. Keynes Technology, let's look at this one. Remember, there was a week then we were discussing this stock every day, perhaps when the entire EMS space was in focus before the elections were coming in. So Morgan Stanley has come out with an overweight rating and a 38.45 target on Keynes Technology. They do believe that the margins are industry leading and they could further expand in FY25 as well. So that is really leading. Let's pull up the stock to see how that one is really moving in trade. Apart from that, let's look at the heavyweight winners. Now the markets are back into the green, 65 points higher, 23,356. So let's look at HDFC Bank, let's look at Infosys, let's look at TCS, let's look at Reliance Industries, how some of these big four are really doing at this point in time. Flattish with a positive bias on HDFC Bank. Let's look at Reliance too. And some of the other stocks, Infosys is down about 0.6% in trade. Remember, IT space has been in the thick of action last entire week, and Reliance is absolutely flat in trade right now. But the Sensex is showing about a 470 point of an uptick at 77,761. Let's also look at the Adani Group stocks. How are they reacting now after the entire last week showed a lot of volatile moves there? Adani Enterprises, Adani Ports. Let's see how that one is really opening up in trade today to see how things are moving on that front. Positive for Adani Enterprises, 2% higher for Adani Ports as well. So that's the kind of move that we are getting on these particular stocks. Let's also look at some of the pharma majors. Remember, there's been some US FDA action. So let's look at Dr. Reddy's, for instance. Let's also look at Jubilant Pharmova. There has been, yes, so flattish with a negative bias on Dr. Reddy's. 6,060 can be seen on this one. On Jubilant Pharmova, let's see, there have been some 3 observations from USFD on that front as well. Some of the other stocks, let's look at Borosil Renewables. There's a fundraise news coming in. Let's also look at Emphasis. Remember, we were talking about that block deal which is supposed to take place. So let's look at how that one is opening up. Borosil Renewables up 1%. Emphasis is also showing slight downtick at this point in time as well. But Godavari Power, let's look at that one. It's going to be looking at a buyback of equity shares in the June 15 meeting. The stock is reacting positive, 4% higher. IDBI has got IT refund of about 2,700 crores. That stock is reacting positively, about 5% higher in trade. Avas Financiers is also looking at a new appointment on the CBO front. So some positive action coming in on the sentimental front on these stocks, Shail.
Ladies and gentlemen, despite the weakness in GIFT Nifty, you have a 54-point uptick. The only 3 stocks that I want to look within the Nifty are, ladies and gentlemen, the tech space. Let us see what it is doing. Infosys is opening 0.9% lower, 1520. Let's look at Tech Mahindra, flat 1377. And how about HCL Tech? This is something that I need to see. Wipro is also 1.1% higher, 490. TCS flat 3894, and HCL Tech, ladies and gentlemen, is 0.7% higher, 1445. Remember, the large part of gain that we saw last week within the Nifty was because primarily of intense short covering in these 5 counters. As good a time as any to speak to Vaishali Parikh, VP Technical Research and Analysis at Prabhudas Leeladhar Securities. Good morning to you, Vaishali. A very warm welcome. Modi 3.0 takes root as far as the Indian economy and stock markets are concerned. Any 2 stocks you think will outperform the broader markets as well as their own sectors today?
Very good morning to all of you. Yes, I think market is on an upward trajectory. So I would be a bit conservative. I do like pharma sector on the whole. So I like Divi's. But well, if you're talking about the front line, then my expectation would be from HDFC Bank, because that has really not participated, and banking index really needs to get in par with Nifty. So I would look at HDFC Bank, because I think positional target we would look at 1620 from here on. So one support participation from HDFC Bank, and the other is of course IT. So I would look at TCS also as a positional trade, because technically I think they are all very well placed and still scope of further upside. So these 2 stocks, to my understanding, should participate.
Okay. I'll also request the PCR to fire Motilal Oswal Securities stock price on the screen. Remember, ladies and gentlemen, this is a stock split adjustment, 3:1. So the price that you see 650, don't be worried how this has fallen. Actually, on a post adjustment basis, it's up 7%. So please keep that in mind. Now, all of defense, let's look at a couple of stocks. Hindustan Aeronautics 1.1% higher, 4800. Garden Reach 1.1% higher. Cochin in the green 1% higher, and of course BDL 0.5% higher. They are opening in the green. Let's look at the entire PSU pack. Remember, it's the cabinet ministers who will be taking charge, and therefore it makes immense sense to have a look at it. RVNL, Sakshi's pointed out, it's an order win, 2.4% higher. IRFC 1.7% higher. REC 1.5% higher. IFCI 1.3% higher. Coal India 1.2% higher. So it's a nice shade of green as far as prices are concerned. I'll also look at all counters emanating from Ahmedabad, my apologies, from Andhra Pradesh. Amara Raja Energy 3.5% higher, 1450. Needless to say, this is a record high. And of course, we'll also be focusing on Heritage Foods, again 8% higher. Remember, the circuit for this one is 10%. So these two stocks right there on the radar as far as prices are concerned. And of course, you'll have some kind of a move also coming into stocks such as SGVN 1.2% higher, 135. Within the mid cap and the railway space, Vaishali, any favorites that you have?
So well, as far as the railway space, I like Jupiter still. Still a lot of scope for upside, and along with that, I'm still looking at Texmaco Rail because it is in a trend, but compared to the other stocks, it still has a lot of scope for an upside move. So these two stocks I would be looking at very closely. And you were just talking about the Andhra stocks. Avanti Feed is worth a watch from here, and also Sun TV.
Avanti Feeds and Sun TV. For all of those viewers who are looking at the Andhra Pradesh related stocks, keep an eye out on these particular stocks as well. Okay, good morning to you, Vaishali. I'll also ask you on RailTel, on the kind of move that we are seeing on this one as well. Again, the kind of order wins that the company has reported. Within the railway pack, are you looking at this one also positively?
So yes, we are looking at most of them, whether it is IRFCA, IRCTC, all of these. But RailTel, of course, right now it is in a very consolidated range. So I would say that support lies at around 350, and it needs to move past 450 levels. Then I think that brings in furthermore strength for upside. So that would be the range for now that I would be looking.
Okay, there's one stock which is already moving up 20% higher. Let's look at that one. Word Wizard Innovations and Mobility. Let's pull up that stock and see how the kind of move is coming in. Strong surge on this one. The company has received an order worth $1.2 billion from Beulah International for EVs. And that's the kind of move that the stock is indicating. Vaishali, do you track the stock?
So it's the same as Onward Technology, right? If I'm not mistaken. The other name for...
Yes.
Yes, so I think technically it's calling for a round of reversal. We are seeing that there is a stock bouncing back. So to start with, yes, it's opening very strong, but above 420, I would be more buoyant for a target of 550.
No, actually, Vaishali, this is Word Wizard Innovations and Mobility. Probably this is a BSE listed stock. Can you look at that one?
Okay, I'll just have a look.
This is a company which is related to EVs, and it's got a huge order from Philippines company, and this is to the tune of $1.2 billion, and that's why the stock is moving up.
Sorry, I can't find the stock.
Okay, no worries. What we'll do is,
What is the price right now? What was it? Is the?
Sorry?
What's the cost of it?
62.7.
Okay, I found it. So I think yes. It's opening, of course, with a 20% upside. I think continue holding to those who are having it. 68 acts as a resistance, and above that, we would be ready for a target of 70 to 80 levels.
All right, got that.
Actually, I think we'll also focus on emphasis. This is where a massive block deal of anywhere between 4,300 crores to 7,000 crores is most likely to happen in the listed space. The counters down 3.4%. Parent Blackstone is to sell about 10.5 to 15% stake in the open market. Let's see how it goes, but it's opening a bit lower. Within the FMCG pack, you've had runaway moves coming into Dabur, Marico, all of the last 15 trading sessions. So Dabur at the moment consolidating 1.5% lower, 604. Let's also look at Marico, a third of a percent higher, 655. How about Lever and ITC? ITC 440, 0.2% higher, and Lever flat as flat can be, 2579. Vaishali, coming to you, any favorites within the Andhra pack apart from Sun TV and Avanti feeds that you mentioned?
So, well, you spoke about heritage, but I think technically it's really run up. So I would not suggest to buy right now, but of course, buying in decline could be fine.
Absolutely. We'll show you the chart of heritage from 350 to 720. It's been 5 trading sessions, so 120% and 3 10% circuits is where heritage is right there in front of you, and today is a 10% again, almost 8%, so there's no volume. I mean, there's really little left to buy into, and of course the charts look overstretched. Vaishali, within the defense pack, what looks good?
Most of it looks very good, but for a buying opportunity, I would still look at Zentech. I would look at Bharat Forge is still showing a lot of strength. And besides that, as I have been mentioning, Paras Defense. That is one stock which is lagging behind, and I think it has given a weekly breakout also. So these are the stocks which still look good. And HAL and all, we continue to have a positive bias. So it's a hold.
Okay, got that. Just about 2 minutes remaining for the markets to open. Let's also look at Suzlon. Why I'm checking this is because the independent director has resigned. Mark DeSealer has resigned from his post on June 8th, and therefore you see a sharp downward reaction on Suzlon as well. Now, what he has highlighted is the issue as far as transparency in the company is concerned. So that will be a very important watch out for as to how the company really comes out with a clarification on that too. 47.4 currently, 5% down. What would you advise, Vaishali? A lot of investors have got into this stock over the last 6 months of the kind of run up that we have seen here.
So we are talking about Suzlon, right? So I would say continue holding, because chartically I think it is ready for new price high levels. 50-52 should be the resistance level. Once we move past that, we are ready for higher targets, because even the weekly chart, we are not seeing any exhaustion. So I think the strength is intact and one should continue holding, and I buy it every day.
Okay, got that. Let's look at some of the big buzzers in trade today. Again, the Adani Group stocks coming back in flavor, I believe. Adani Ports is now the top mover, 1.7% higher. Okay, Shell, I think markets have opened.
So let's look at Infosys, 7 rupees lower, 1526. The Nifty, ladies and gentlemen, 68 points higher. Congratulations, record high. I have always maintained that Vaishali brings a lot of lady luck to our screen, and with her presence, you have a record high, not only on the Nifty but several other indices. 50,000 is back on Nifty Bank, 250 points higher. The Nifty 500 is opening 0.5% higher, 21,890, and of course there's a mild red tick on the IT index, nothing to be worried about. Okay, now let's look at what the index heavyweights are doing. 5 rupees 60 higher on HDFC Bank, 1578. Reliance 13 rupees higher, 2955, and Infosys about 7 rupees lower, 1526. From the first look, 9 out of 10 index heavyweights are in the green, so this is looking good, and the Nifty, ladies and gentlemen, is running away. We'll have 24,000 very shortly. Vaishali, any option trade that you want to take in? Maybe 24,000 Nifty call expiring June 13th. Does that look good? 23,400 Nifty call.
I don't do options, but yes, my bias is positive towards 24,000.
Okay. No,
yes.
Okay. No issue. We'll try and seek that out on the charts. Emphasis is opening 2.5 points lower, 2409. The block deal, ladies and gentlemen, is done for 15% stake. So 6,900 crores worth of trade that's happened. 2 crore 97 lakh shares have been traded. Suzlon, now this is in pain, 3% lower, 48.48. This is the issue of an independent director resigning from the board. There is no stopping AREM, which is Amara Raja Battery, 7% higher, 1500. HAL is moving 1.5% higher, Hindustan Aeronautics, 4817. RVNL, new order win, 1.9% higher. In good shape, BEL, 2.2% higher. IRFC, Tata Motors, Tata Steel are doing phenomenally well as far as prices are concerned. But the stock for the moment, Suzlon, and the stock for the moment in the green is Amara Raja Batteries. Apart from all these, Vaishali, anything that catches your fancy?
Well, I would look at, I still like Adani Port. I like ACC. So these are the stocks which should continue to do well. They are showing a lot of strength. So I would look at these stocks.
Of momentum coming on the entire Andhra based stocks, so you can look at KCP, that's up 7% as well. You also have stocks like Amara Raja Batteries, that's also up by 7%. Let's again look at Heritage Foods, how that one is opening up as well. So again a strong move continuing from last week. Yes, now 9% higher for KCP at 270 odd levels, that can be seen on this one as well. Meanwhile, Emphasis, there's a 15.5% equity exchange, so there is a 1.7% downtick that's happening. We will get more details on this large deal that has taken place. 2.95 crore shares worth 7,066 crores have exchanged hands. So 15.5% equity has exchanged hands on Emphasis. We'll keep an eye out on this one as well. But let's again look at the strong moves that are being seen across the board. Paytm is up 7% in trade. Heritage is up 10%. So Andhra based stocks and Paytm is also moving up. Where would you look at within these strong movers today, Vaishali? How about Paytm?
I think Paytm is out of the woods, according to me, because the way it has made a good bottom. And I think a calculated risk can be taken on this stock, because once the trend is formed and we see this stock moving higher, I think in all likelihood this can go towards 550, 600 levels also.
Okay, 550, 600 kind of levels is what Vaishali believes can be coming in on Paytm. Calculated risks can be taken. Other construction majors like Ashoka Buildcon is up by 8.2%. How are you looking at the momentum here, Vaishali?
So I would say overall full infra sector has shown a lot of strength, and this is one of them too. I think continue buying, because infra is going to be the theme for quite a while. So yes, my view is positive on this as well. And yes, it's positive. We can look for a target, because even on a weekly chart, it has given a breakout. So this can go towards 400 levels.
Okay, ladies and gentlemen, 9:20. We've had a nice even start as far as the markets are concerned. Everybody across fund houses, across the equity strategist and capital allocator teams will be looking to the setup of the cabinet. Remember, ministers have to take charge early morning, and I think in the next 1 hour or so you should have details which minister has reached which ministry. More importantly, today 5 p.m. there is the cabinet meeting, so portfolios and other allocations will also be known. Meanwhile, Nifty is 94 points higher, 23,382. What's happening on the Bank Nifty is something to be watched. Remember, it is still 1,000 points short of its all-time high of 51,134. Whether that will come this week or later, only time will tell. But a very, very strong move coming into several banking stocks. Let's look at State Bank of India. Let's look at Kotak. Let's look at Axis and ICICI. These are the stocks that are doing phenomenally good as far as prices are concerned. To you, Vaishali, State Bank of India 842, 12 rupees higher. What are the charts telling you?
I would say, well, it's in a very good uptrend. For a near term, 790 would act as a good support. And since it's above 830, 840, we feel that this stock is likely to once again retest the 900 levels. So it's a buy for now.
Okay, there is a no-brainer involved here. SBI will reclaim its all-time high. The charts are very, very consistent and very, very strong. Godavari Power 10% higher. This is again news-led. Very, very strong move coming into that particular counter. 1070 for you in front of the charts. Let's take a detour into the broader markets. A strong start. 1650 shares in the green. 375 in the red. We tracked 19 indices for you, ladies and gentlemen. 16 are in the green, and there is absolutely no surprise that Nifty PSU Banking Index is the top gainer. All top stocks, all 12 stocks that make up the index are in the green, and you have a 74.10 price on this one. Vaishali, coming to you. Canara Bank is taking it away after a 5-for-1 stock split. It's optically cheaper to retail investors. What are the charts of Canara Bank telling you?
I think I will be holding because overall for PSU Bank, it may take a breather for some time. But I think at these levels, it's still a hold. If market is to sustain and move higher, this can go towards 135.
Okay. Several other stocks also moving up very strongly. Let's look at the capital market related stocks. Motilal Oswal, the stock is 13.5% higher in trade. A strong move that can be seen on this one. So let's also pull up to see whether this is a sector kind of a move. Let's pull up all the other stocks as well to see whether say a CAMS is moving or BSE is moving in tandem as well. MOFSL is moving up strongly in trade too. Of course, this is news led. So we will be keeping an eye out on this one. There is also Ganesh Housing Corporation that's moving up very strongly, about 8.5% higher that can be seen. But remember, even MGL, let's look at that one. That's the top mover on the F&O space. Remember, there's a strong move that's been coming in. After the brokerage houses reports have been giving upwards of 1600 kind of targets on MGL after the analyst call and bullish targets that the management themselves have given. On MGL, would you have a view, Vaishali?
I think it's good setup. I think the stock is ready for targets of 1500. So one should continue.
Okay,
And this
that.
had come last week for a good buying opportunity. So I think, yes, it's a hold.
Okay, and the power space stocks are also moving up very strongly. So Power Grid is up by 3.5%. You have NTPC that's up by 1%. Coal India is up by 0.8%. You have PFC and REC also into the green. What looks positive in the power space, Vaishali?
I think overall, all look good. Even NTPC and Power Grid, they still look very strong for upside move. But I always maintain that Tata Power has yet a lot of upside potential. So I would say that my focus would be more on Tata Power.
On Tata Power, okay. Some of the other stocks that are moving up, let's also look at some big momentums. Okay, the real estate space is coming back in action. Remember, last week this was a big winning space again. And again, Macrotech Developers is up 3.2%. Prestige, Brigade, Phoenix Mills, Sobha, the entire pack is up and about. What are you looking at into the real estate space, Vaishali?
I think the Frontline Godrej Properties and all, they have done a pretty much good run up. I mean, of course, having said that, I don't mean to say that it doesn't have further upside, but now I think one can look at Sunteck Realty, all these stocks, Shobha, they have a lot of upside potential, and Sunteck in particular. So, well, that would be the two-tier strategy would be working better.
$925, ladies and gentlemen. We are 87 points higher on the Nifty. Sakshi, what I'll do is I'll read out a couple of stocks that have hit record highs. Some names we've already discussed, but new ones. Raymond, almost 5% higher, 25.90. There is a strong move coming into EID Parry, 723, 2.5% higher. Remember Motherson? Now there is a very strong move coming in on Samvardhana Motherson for two reasons. The entire OEM pack to which Samvardhana supplies auto ancillaries, whether it is Eicher, Bajaj Auto, Maruti, Ashok Leyland, Tata Motors are towards all-time highs, if not at record highs. Motherson is something that we need to look at. 3% higher, 161.30. Vaishali, what are your charts on Motherson telling you?
This has been a very consistent and a slow moving stock, but I really like this stock because I think if you see the weekly and the monthly chart, everywhere we are seeing new highs coming in. So I would say this is ready for a target of 170 in times to come, and further on 200 cannot be ruled out. So it is a buy at every decline. 150 acts as the near term support.
Okay, while it's early stations as far as the F&O markets are concerned, but you have 0.2 increase in open interest as far as Motherson is concerned. Keep an eye out on this one. Remember, we've discussed stocks like Uno Minda. We've discussed stocks like Bharat Forge, which have made consistent highs. But here is India's largest auto ancillary, Samvardhana Motherson, which has had a very, very quiet last 1 or 2 years, and it is now breaking out into higher and better orbits on strong delivery and trading volume. So keep an eye out on this one, and dare I say this is something which is in the still affordable zone, which is low ticket size, relatively low ticket size of 161 rupees, and obviously a very, very strong parentage. What else is moving strongly? I think the entire telecom pack. Tata Communications 2% higher, Bharti Airtel 0.2% higher. Let's look at Tata Com. This is 1855, and Vaishali, when you had started appearing on Business Today, this was one of the initial stocks that you had marked somewhere like 1350, 1420 levels. Now at 1850.
I still maintain a buy at these levels also because I think technically it is still very well placed, and near-term support lies at 1700. Once we see the stock moving above and sustaining above 1860, 1880, I think this is ready for a target of 2000. So it is still a stock which is technically very well.
Okay, got that. Well, Vaishali, thank you so much for being with us on this special edition and sharing with us all your thoughts right there. Let's also welcome viewers now. Our other guest who's joining right in, Manish Tangi, now joins in, CEO and founder at Mosaic Asset Management. Warm welcome to you, sir. Thank you so much for taking the time out. Well, the first question is obviously on the big political change that has happened over the last week, and now we are looking at the new cabinet to take shape today. We will get to know who holds the top portfolios within the cabinet in Modi 3.0 and the next 5 years, and how do they really look like. Do tell us, how have you analyzed the situation over the last week, extreme volatility in the markets, and what is your strategy now? Do you change anything with the coalition government in place?
Hi, good morning. So, the coalition government generally tends to be, the way sort of it's shaped up is, it should do well, and at least the ideological and the cultural reforms that a government could have undertaken, are at the back burner, and which is what markets should rejoice. I also think that India does not require big bang reforms anymore. I think a little bit of a, quieter period over next few years would actually be just about great for the economy to sort of build on its own. A high capacity utilization, low leverage. The corporates would be sort of very happy dialing risk at margin. Just don't sort of be in the way of private businesses now. And if at all some interventions are needed, should be incremental in nature. So I guess there is a reason why worldwide, coalition governments mandates which are not sort of are somewhat fractured are actually appreciated by markets. And I guess, that's what India has got. I kind of think that it's a win-win-win mandate as far as Indian economy and nation and culture are concerned.
Okay. So, Manish, would you be really looking at the same sectors that were the outperformers in Modi 2.0, or would you change anything in terms of the incremental flows that will go in now? Will there be a change in sectoral theme performance now?
So 2.0 was sort of a very longish period, at least, the last 2 years, the kind of, or especially in last 1 year, in terms of cap orientation, small caps have become extremely frothy. Certain themes like logistics, core industries, capex, they sort of very likely to do well, but valuations are far too expensive, and there's nothing left on the table maybe for the investors, and therefore margin of safety is low. I guess what Modi 3.0 should sort of settle an argument for an investor that it's the business as usual, and therefore let's look for reasonable valuations and dial risk. So to that extent, there could be a rejig. I think there are pockets in the markets which are better valued. Traditional businesses, sort of BFSI, given that the tech cycle is most probably past its stuff in US, you could very well have a sort of better cycle unfold there. And whereas, manufacturing in India is likely to do very well over the next 5, 10 years, but, it's way too pricey for investors, and, nothing much is left on the table. So I guess that bit of a rejig, I think, is likely.
Okay. Good morning, Manish, and a very warm welcome to you on Business Today. For 15 years at Aditya Birla Sun Life Mutual Fund, you've allocated capital as the co-CIO, and over the next 5 odd years, list for us or paint a picture for our viewers as to 3 sectors which you think will have not only a macro tailwind but also a regulatory as well as government tailwind, given the background of a coalition government at the helm.
At least for the near term, which is in terms of next 2.5 years, I would say that a term of trade adjustment should take place in favor of rural economy, away from urban. So this sort of very K-shaped recovery that we've all argued so many times, that, the top 1 or 10% primarily is an urban proxy growth that India has had. I guess, the political mandate, once you see beneath the surface, is that, the incumbent actually did somewhat worse than what they would have expected in rural areas. So this rural distress, which is not very well captured in our data, votes perhaps is the best data that you have. And, it tells you that government ought to do something about it. So I think from this budget onwards, I would imagine that, you'll have policies favoring rural economy at margin versus urban. So corporate tax cuts, lots of infrastructure, a lot of these things benefit at margin urban economy a lot more. And some bit of a redistribution and support for the farm prices and many other things do support rural. So no great visible signs yet, but budget onwards, I would expect the rural economy to start to do well. Typically, if we've seen in last 20-25 years, these are cycles. For you have 2-3 years of good rural economic cycle and urban economy thereafter. So I think, in the first part of Modi 3.0, you were to think rural would do well. I guess, BFSI, because of the valuation, I think should continue to do well, should deliver market plus returns, I would say, because the NPA cycles tend to be sort of, first in banks, the way it operates is that they make a lot of money for 5-6 years and they lose a lot of money for 2-3 years. We are in this phase of making a lot of money and very little NPAs. So I guess, since NPA cycle is far away, you'll have decent rota for banks, and, they will likely do decently well. And third, if in India, if you're bullish, you have to pick tech, because, that's the business which perhaps will pull us out of our lower middle income status. If, Modi's sort of vision of developing India in 2047 as a developed country, I think tech has to play a significant role. There is every possible data in and around the country that, that's doing very well. It's one of the reasons why in 2022 we got saved, because our current account surpluses actually from the services side were decent. So I would, and AI actually assists Indian tech a lot. It is not a good news for Indian students or Indian job market, so to say. But I guess, tech as a business would continue to do very well. So, I would say that, investors could allocate sort of overweight positions in rural proxies, BFSI, and tech.
Okay, a fair point, as you mentioned, and yes, this is absolutely correct. We have in India cycles of 3 years, 4 years between urban and rural. Tax revenues are only so much, and the government does its best to allocate it to a sector which might help the economy as also job creation, and of course the focus will be the rural theme. Brilliantly put, Manish, that the vote is perhaps one of the best indicators that we have in data staffed India as to where capital is needed. Manish, the other point I wanted to ask was this unrestrained enthusiasm for PSU banking stocks, given the fact that balance sheets, NPAs, net interest margins have improved dramatically over the last 2 years. Is this a popular trade according to you? And given the coalition dharma of trying to maybe helpful to everybody, is the peak in sight or in place as far as PSU banks are concerned?
See, if the stocks are forever, then PSUs are to be assumed as utility firms. They're not for-profit firms. Any PSU that may be, and if the macro is decent, everything starts to look super good. Moment sort of there is a slippage. Imagine, think of oil at $200. You think PSU oil firms would be allowed to make a lot of money, given the distress that the FISP would be going through. Similarly, PSU banks and many others. So in a sense, it's a cyclical trade. It's a high beta trade. It has happened over and over again in India. It's typical of RE and such likes, that in good macro conditions, when tailwinds are in place, government seems to be sort of sleeping and, rather stating that, you guys can sort of do your job, make money if you wish. These are decent franchises, of course. They have an ability to garner a lot of low-cost liability. Now, incrementally, because everyone does only housing and retail, and it's sort of mostly CIBIL proxy. It's underwriting in itself, could not get you a lot of distress, and so therefore it seems like a decent trade. Only until a point, when macro turns worse, and you sort of give back to the old ways of actually running businesses. So this is unfortunate that anything which is owned by a government, its priority, there is nothing wrong in it. Its priority is actually general public good, not the private good, or not profit of the country, not the profit of the firm. And right now, at this point in time, profit of the firm is prioritized essentially because public good is not sought from it. But then it's, if as I started, if stocks are for long term, you ought to be extremely careful because for long term, you will have cycles and you will go back to a situation in which you won't, these folks won't be allowed to prioritize profit over public good. So trade it, absolutely trade it at a first sight of macro distress exit. If you have the gumption and a framework to both dial in, dial out, you must sort of course, position yourself for these trades, but otherwise avoid.
Have turned extremely volatile, and from the high point, both the Sensex and the Nifty hit record highs, 77,000 for the first time on the Sensex as well, and the Nifty also at a new high as well of about 23,411. But from that level, about 150 points lost from that high point today. The Nifty Bank is now flattish with just about a 1/10% up move. But remember, this index also has lost about 400 odd points from the day's high point already. So we'll see how this really pans out. Metals and IT spaces are dragging in trade today, and the top drags on the Nifty, Infosys, HDFC Bank, TCS, HCL Tech, ITC, Tech Mahindra. These are the top drags on the Nifty in terms of the points contribution on the downward side. So that's the overall view. Manish, how are you looking at the entire IT space? Are you buying into the kind of momentum that we saw build up into the IT space in the last entire week, 10 days odd? Or would you still be staying a little cautious on this, given that the managements have also not been very bullish on the outlook in the near term?
So we tend to take sectoral calls, and we should of course, dial in, dial out as quickly as traders would do. And we've been sort of long IT for fairly long time now. As I mentioned, that both AI and the business cyclical reasons, IT in isolation has had a down cycle already.
Yeah.
So even though it is very likely that US at some point in time in next 3-6 months would slip into recession, IT business has been through recession already, and which basically means it is somewhat what do you call it, recession proof. And that is the part of a portfolio which is not as richly valued as FMCG, nor it is going to be sort of prone to a big cyclical downturn. I think should do well and should be part of your portfolio sort of pretty significantly. So I think both for the structural and cyclical reasons, IT sort of continues to make sense in everyone's portfolio right now.
Manish, the other point I wanted to take your view on was this unrestrained price rise that we are seeing in auto stocks. This is at one end we are talking about rural distress, and erstwhile rural focused stocks such as Mahindra and Mahindra show no sign of stopping. Ditto for escorts. To some extent, Tata is of course a commercial play. But what's running behind this very, very strong move that you are seeing in Hero Motors, in particular Mahindra and Mahindra, and of course the entire auto OEM pack, Maruti included?
No, I've made this point for the last few months, but in some sense, rural distress, unwind of rural distress, and therefore term of trade adjustment in favor of rural economy is in play already. And auto is one way to sort of play that. FMCG is another way. So I guess fund managers are look, in India we all are getting 25,000 rupees monthly. Any data which or any half decent idea would get captured so quickly. You saw that in FMCG how plus minus 2 days of election results, how FMCG behaved. So I think our jobs have become super difficult, in terms of like dialing risk. If at all in India, has to be dialed very, very quickly. So yes, heroes of the world. But I have to caution, that look, auto in itself, again, for what is happening in China, China is doing to China is doing to cars what it did to toys 20 years ago. And, you ought to be extremely careful. So in a sense, auto business as such would at margin increasingly become tariff proxy. How activist your government is to not allow Chinese stuff to get sneaked into our country, because they are highly competitive and of course very, very far more advanced than us in terms of the technology. And that worries me. But yeah, even we are sort of super long two-wheeler businesses and Mahindras and such likes, because it's a rural proxy.
Absolutely. Hero Motors was asleep for probably 5-7 years. It
5-7 years, yeah.
did nothing. And this was at a time when Bajaj Auto and TVS Motors practically ruled the roost. Now there's no stopping Hero Motors. Of course, it's a catch-up play and a pure rural theme compared with Bajaj or TVS. But look at Escorts. Escorts is now $4,000. We talk about tractor sales actually slipping lower, but there is absolutely this mad rush to buy any and everything in India which may have fallen 30-35% from its peak. Either we are in a market where we've stopped looking at earnings at all, and we just buy because of somebody else buying it after us or before us. This is a kind of market which really is very, very dangerous for a new investor.
No, in a sense, okay, this is a programmed trading now, of programmed allocation. All of us as fund managers, if we sort of are given 3 lakh crore incrementally every year, and it's a fresh deployment, I think irrespective of what everyone tells you on TV, the first screen is run is, what has underperformed. And the reflex of a fund manager is to actually buy what has underperformed in terms of at least be overweight, incrementally positioning in stuff, which has underperformed. Unless, of course, no incrementally bad news is pouring in. So, basically the trick of actually buying is not when good news has started to appear. The trick of buying is when bad news has disappeared. And that is what has happened to some of these businesses, that it margin bad news after very long time, two-wheeler sales are sort of perking up a bit, After the insurance, you sort of saw most two-wheeler firms struggle for so long. They're perking up now. Just after COVID, of course, two-wheeler sales were in dumps, and, even when PV sales recovered, two-wheeler didn't. When the bad news stopped, of course, we all have to lap up. So it's a rotation trade. It's a trade which sort of works in bull markets almost always, especially bull markets of flows, which we are in right now.
Okay.
But I have to tell you the small point here that,
Yeah.
if you have to be completely local, there's only one business, where there'll be no competition, no China, no, there'll be cyclicality, but that cyclicality can be programmed well. And that is BFSI, which is financing business. Because cyclicality of financing business only is with respect to NPA cycle. And the thing is that NPA cycle comes with a lot of dhol nagadas, so you can know this. Any half decent guy, who's had understanding of credit markets, would know this at least 1, if not 2 years in advance when it is arriving. So that's the only core India business which is going to have no competition whatsoever anytime.
Okay, that's wonderfully put, Manish, and very simply strategized for all our viewers as well to really understand how one should be really looking at domestic versus cyclical stories really going in favor of India. How about, the division between large, mid and small caps? Over the last 6 months odd, we've of course seen this entire conversation narrative build up that there is a lot of froth in the mid and the small cap space, and therefore the large caps could be better placed. Are you also in the same camp, and how are you really deploying funds on the market cap basis?
So the short answer, of course, is anyone who's seen cycles sort of knows this as a matter of fact that in very long run, the India small cap outperformance actually does not happen. They converge. They also know that it's a cyclical trade. Small caps actually work only in 2 conditions, and both have to be enabling conditions. One, the macro should be fine. So no distress in currency, no distress in rates, no distress in regulatory restrictions. And the second is that the growth must be accelerating. Okay. So even if, let's say, growth settled at 7% now or 8%, and it does not accelerate, basically that will pave way for a situation in which large caps begin to do better than small caps. So these conditions, which is growth accelerate, meaning is in some form, crudely put, if growth continues to surprise you higher than what your analyst had anticipated, and of course macro remains decent, as I said, CAD low, currency does not appreciate, rates are not too high, in that setup, small caps do well. People also must know this, that small caps have down cycles, independent down cycles vis-a-vis large caps. You saw 2018. And, many such cycles have happened where there is a bust in small cap for a variety of reasons. Let us say, I'll tell you a small example. If the capital gain tax were to increase from 10 to 20%, And you should assign 50% chance of that in next 1 year, maybe in this budget, but maybe next budget. That sort of would entail a big bust in small caps, because the small caps positioning is such that its ability to absorb these shocks, given that it sits in the balance sheet of retail investors, mostly, not institutional as much, I think, the reaction function is going to be more brutal. So very, very strong statutory advice for everyone to be extremely careful, have strict losses and be very, very generally conservative if possible, given the valuations are, they've never been as expensive as they are today.
One final question to you, Manish, before we bid you goodbye. And it's been a phenomenal learning exercise over the last 20 minutes. It's a very simple one. Where do you see the Nifty by December 2024?
I'll give you a sort of I know it's a simple question, and sort of you're smiling alongside essentially means that, look, I've tricked you, it's not simple, and yet I'm calling it simple. Think of it like this, I'll give you a small framework, okay? And for your viewers, which people don't see, basically a Nifty delivers returns in real terms, which is reverse of PE. So if you have a forward PE of 20 times, that means 5%, reverse of that is the real yield. Okay, real yield is the yield that you get from markets over and above inflation. Okay, so unfortunately, this gauge does not work for 1 year, but it works for 3 years. So if you have a Nifty at 20 times, it basically is promising you that I shall pay you 5% over and above inflation. And if you ask a bond guy, then he will tell you that if India inflation today, core inflation in such sort of rather buoyant and euphoric times is at 4%, then it's likely that it's a peak inflation, and you could actually have lower inflation in future. So anyway, let's stay with 4% inflation. So 4 plus 5% real, so that's about 9%. Little bit of efficiency gains, maybe India is going to sort of decently grow and all, so maybe add a percentage more, but that's about it. Now, this is the bad news in a sense that 10%, is basically good real yield. That's 5% real yield, but unfortunately low risk premium because bonds are at 7%. So you have only 2 to 3% equity risk premium available in the market today. Now, this is the moti way of actually looking at over next 3 years, how a Nifty would perform. Sort of there 9 or 10% thereabouts return, CAGR returns, and is what you can seek from Nifty at these valuations, which is okay in terms of real returns, but not okay in terms of risk premium over bonds. And which is why the final message to your investor is that, okay, thaw a bit and sort of reallocate some money to bonds because they are better priced relatively than equity. So this all equity portfolio, there are not many, but if the all equity portfolios have to reallocate capital to bonds, it's very likely that 10-year bond will also deliver you 10%, given that I think that those will head to about 5.5% over the next 2-3 years.
Okay, wonderful. Well, thank you so much, Manish, for speaking to us on Business Today Television. And, of course, it's a truly appreciation that, you found out time, 20 minutes in our morning show to give us that insight to all our viewers as well. And we'll have you back very soon on Market Today and Business Today Television because this conversation has just only begun with you on our channel. Thank you so much for being with us. Meanwhile, viewers, we will get you a scoop and our colleague Chetan Bhutani is now with us. What is going to be on the agenda for the first few days as far as the new government really takes shape? Chetan Bhutani is with us to break us that exclusive, and this comes in with respect to the affordable housing space. Of course, we do remember, Chetan, that affordable housing was one of the key themes that the BJP-led NDA government had pointed out in its manifesto as well, if coming to power, and seems like they've already started on this journey before even the cabinet is formed.
Well, absolutely, Sakshi. The 100-day agenda is, of course, on the priority list for the government. What my sources are telling me is that today, when the Union Cabinet meets at 5 p.m., there's likely an approval of 2 crore additional houses to be constructed under the Pradhan Mantri Awas Yojana Gramin. The PMAYG scheme was initially, started with around 2016, and now today, in fact, 2.95 crore houses have already been built under that, and 2 more crore houses are scheduled to be built with the allocation of about 54,000 crore rupees. In this interim budget of 2024-2025, Nirmala Sitharaman had announced that the government would be building 2 crore houses under this scheme with a total allocation of about 54,000 crore rupees. So clearly today, my sources are telling me that this could get an approval. In fact, what my sources are further adding that the government may also increase the cost of construction of the houses under the PMAYG scheme from existing 1.20 lakhs to 1.8 lakhs for the plainy areas and for the hilly areas where the houses are constructed, because of course the cost of construction goes up much higher in hilly areas. The cost of construction would be increased from 1.3 lakhs in hilly areas to about 2 lakh rupees, which is nearly accounting for about 50% hike in the allocation for construction. So clearly good news coming in for the housing sector and of course for the affordable housing sector as well.
Okay, thank you so much, Chetan, for getting us that exclusive, and congratulations to you on getting that done. Now, our realty space is, of course, in sharp momentum, 1.2% higher in trade, and along with this, the housing finance companies, which we were discussing even before the elections as well, that continues to be in the thick of action as well. I think we took a few names like Ganesh Housing Corporation, etc., that were in focus in trade today as well. With that, viewers, we've come to the end of this our morning discussion on market today. So we'll wrap it up at that. The Nifty's turned absolutely flat with slight negative bias at 23,282, but it's only the private banks, FMCG, metals and IT that look to be dicey in trade right now. Let's see how we move forward from here and how the day really pans out. But do stay tuned on to Business Today Television as we continue to bring you all the action that's buzzing on D Street, and especially from the Prime Minister Modi's cabinet and all those details from India Today as well. With that, thanks a lot from both Shail and me on this edition.
मैं शिवराज सिंह चौहान ईश्वर की शपथ लेता हूं कि मैं विधि द्वारा स्थापित भारत के संविधान के प्रति सच्ची श्रद्धा और